Candle range theory trader back with you. Another video on how to scalp the market with the candle range theory. So let's not waste time and get right into it. What this video is going to cover is the mindset of a scalper. Okay, the pattern to look for with the candle range theory, times to trade, and real chart examples. So I'm not going to read all of this, but let's just know that you have scalpers, you have swing traders, and you have day traders. Okay. This video is for my scalpers. I've done one for swing traders. Most of my videos are for day traders, but I didn't want to leave you guys out. But what is a scalper? A scalper is a person who's going to be a fast thinker. They're big on sniper entries. They have a lot of discipline. That's the main thing I want to stress here, discipline. Okay, they do not let any losses get to them. Okay, they have really tight risk management, and they have precise entries and precise exits to look for small price movements. Okay, for the Forex market, we're looking for anywhere from about 25 to 35 pips or so on a lot of these ranges. But that's what they're looking for. They're not looking for big moves. They're looking for consistent small moves over time to help compound their account. Okay, so that's the mind of a scalper. This may not be you, and that's okay. You may want to trade for 100 ticks or 100 pips or 50 pips, etc., etc. That is more than fine. Okay, but if this is you, if you think you are a scalper, you like to be in and out of the market, you're not holding anything overnight, you just want to get in and get out. If that's you, let's continue. Now, for this method, we're going to be trading the 1 hour chart. Okay, all the charts that I'm going to show you in this presentation are 1 hour. Okay, all the times that I mentioned are Eastern Standard Times or New York time, USA. And this pattern works for any market. So let's take a look at some real chart examples here. So the first one, this is a long example. Now, you'll see here that we have our ATR candle first. Okay, so that's rule number one. If you do not know what I'm talking about when I say an ATR candle, you need to pause this video, go to the description, and look at the title, look at the video titled what is the ATR candle indicator? And that will explain all of that. Okay, this is rule number one. If there is no ATR candle, you do not trade. Okay, that's rule number one. Rule number two is that the money candle must form. Okay, this is a non-negotiable. The money candle must form 1 hour after your ATR candle. All right. So what is the money candle? It is the candle that breaks below the range in this example and closes back inside of it or close enough into it that it doesn't show a clear breakout. Okay, we like to see it back inside the range, but as long as it doesn't break the range by, I'd say, like, say 5 to 7 pips or so, that's fine. Okay, so this example here, it did close outside the range a little bit, but this is fine here. This is not a breakdown of the range. We don't expect price to continue downward. All right, so really you're just looking for, a doji is the best thing to see, but ultimately they can be different. Okay, for instance, this is another example here. This is the blue ATR candle first, and then the money candle following after. You see it indicated by that green arrow there. Money candle dips below the range, closes back inside of it. Okay, this is a 2-candle pattern. This pattern takes 2 hours to develop, and that's it. It's not 3, it's not 4. If the next hour after your ATR candle does not present, trade is invalid. All right, so you have to stick to that rule. Don't say, oh, I'll give it another hour. No. Okay, no. All right, here are a couple of short examples here. So here's the yellow ATR. So let's remember how I have my ATR indicator set up. If the candle's yellow, I'm looking to go short. And then the next hour, all right, money candle goes above, closes back inside the range. Perfect. That's all I need to see. I'm in. All right, it's very easy to see. Okay, obviously, take profit is to the bottom of the range. Next, key point I wanted to bring out here. Okay, so we have our yellow ATR candle shooting up. Great, love to see that. But notice here, the money candle is a bigger size. Okay, it's a bigger size. So for larger money candles, we can use a fib. And ideally, we want to wait for a 50% retracement. Okay, we wanted that. I call it a half off sale. You want to get in, but don't get in as soon as that money candle closes, because depending on your lot size, you may get margin called, or the stop loss is going to be so big that it's really not worth taking the trade. Okay, remember, we want precise entries as a scalper. All right, so if the money candle is big, or if it takes out a big portion of the range, either wait for a retracement, or there just maybe no trade. Okay, but bigger money candles, see how far away it is from the top of the range here? We don't like that. We like to be in as close to the range as possible whenever possible. That's the key there. All right, so the key thing is this. When you look at all these trades, what do you notice that I showed you? I didn't show you the results. Why? Because the results don't matter. You might be thinking, what? What do you mean the results don't matter? No, I'm supposed to be trading and winning. No, you're supposed to be looking for this pattern and trading it without question. When you see it, you pull the trigger. The only time you can hesitate is in cases like these where the money candle may be bigger. But something like this is your bread and butter right here. This is your bread and butter right here. Tight stop loss right below the money candle low. Tight stop loss right above the money candle high. The results don't matter for that because you're going to lose some, but you're going to win some too. If you keep your losses small over the long run, I promise you will make money. I promise, I promise, I promise. Okay, so let's get into some times to trade. So while you can trade this method 24/7, okay, there are 24 hours in a day. If you're doing the 1 hour chart, obviously you can trade all 24 if you want. But guys, you don't want to sit in front of a computer or on your phone all day, okay? The longer you sit in the casino, the more likely it is you're going to lose. That's what the casino wants. That's what these market makers want, and that's what these prop firms want is to get you in front of the screen and keep you clicking buttons so they can take your money. Your goal is to not let them do that. So keep a schedule. So for example, I'm only looking for a 3 a.m. average true range candle, blue or yellow, and then I'm looking for a 4 a.m. money candle, okay? Just a little 2 hour window, okay? You don't have to sit in front. You could check your chart once an hour, every hour from like say 3 to 5 or maybe 9 to 11, okay, for London session or New York session. If you want to trade Asia, that's fine too. Me personally, I would not look for any setups before midnight Eastern. I have seen some ranges work out at like 7 p.m. Eastern Standard Time though. But typically, in my mind, Asia starts at 8:30 p.m. Eastern Standard. But but like I said, it can work anytime. But the odds are the highest if you're trading during London or during New York. That's when the probability is the highest. So can it work at 7 p.m.? Yes. But I mean, 7 p.m. at night, do you really want to be in a chart, or would you rather be spending time with your family, maybe doing something else, something you actually enjoy? This is just, don't spend too much time on the chart is the point. Okay, so stick to a schedule. So now let's get into some real charts here with some actual results. So here you go. You have the 8 a.m. ATR money candle here. So remember, what's the next step? The next hour must present. Okay, must present the ATR, the money candle, and it does that. Okay, that's the blue candle there. Pokes above the range, closes back inside of it. So because the money candle is a larger size, we use our fib from the top of the money candle to the bottom of the money candle, and I denoted that black line there to show where the entry would be. It doesn't quite get to the 50, but it's close enough as to where if it's close enough to the 50, I would go ahead and get on in. And as you can see, price did hit the bottom of the range. This was good for about 35 pips. Okay. Next candle. Okay, we have our money candle here, yellow, right there. The pin to the weekly open is good here as well. We like to see that. And so once it hits that, there's the money candle. We're in. We're in right here on this this candle open. It did spike up again a little bit, but give your stop loss a little breathing room. And as you can see, it did trend down very nicely. This was good for about 37 pips. So again, 3 candle pattern. The ATR, money candle, that's when you start trading right here. So this is 9. It started at 8 o'clock, 9 o'clock, and then 10 o'clock we start trading. Okay, that's that. Next chart here. Why did I not put the times on here? I do apologize for that. I want to say this was a 2 a.m. I'm pretty sure this was a 2 a.m. Don't quote me on that, but let's just say it's 2. So let's say 2 a.m. candle here for the blue. So remember, blue, we're thinking long. 3 a.m. money candle here. And then you would have been out in 1 hour on this one. If you just got in as soon as the money candle closed, boom, straight up. Okay. I don't know how many pips this was. I do apologize for that. I want to say it was maybe in the 20s, but I'm just not sure. But you'll get these moves where you could be out in an hour. Okay, remember, this is just for scalpers. You're in and out. Okay, in and out. Okay, next. This one here. Well, this one was definitely 2 a.m. So yeah, I'm just not sure what the prior one was. I do apologize for that. But okay, so we have a 2 a.m. candle here for the long example. 3 a.m. money candle right here, poked below the range, closed inside it. We're in. This was good for 83 pips to the top of the range. Now, let's keep in mind though that while you see this range here, price did break out of the range eventually and kept going towards the upside. The opposite can also happen. I don't want this to be you. Take profit should be top of range or bottom of range and be satisfied with that and get out. Because this is what you don't want to happen is you're thinking it's going to break out of the range and then price comes right back and stops you out, or you're out at break even when you could have had 83 pips. At $10 a pip, you could have $830. Okay. Instead, you could have had zero trying to be greedy, thinking it's going to break out. I don't think scalpers will have that problem, but just in case, we always have to guard against greed. Once it reaches that top of the range, guys, you're done. Get out. It's over. Okay, trade is done. You're good to go. You have won for the day. Okay, so in conclusion, let me just make this black because that's what I prefer. Bang. Stick to a schedule. The more trades you take, the more likely you are to lose. So be selective. Okay, don't go trading every money candle you see. I like smaller money candles, not the bigger ones where I have to wait again for a retrace. No. Okay. If you're watching as many pairs and instruments as I do, you're going to see multiple ATR candles and possible money candles. So take the one with the tighter stop loss. Okay. Take the one with the tighter stop loss is what I recommend. Don't go for the bigger ones. Go for the ones with the tighter stop losses. All right. The money candle has 1 hour to appear. This is a non negotiable. If it does not follow the ATR candle, the trade is invalid. That's rule number one. Okay. Remember, just to remind you, this is the pattern right here. 1, 2, 1, 2. 2 hours, 1 hour, 2 hour. If it doesn't show you the money candle following it, scratch that trade. You're out of there. Don't give them your money. They didn't deserve it for that day. Go to another pair. You'll find another one. All right? Non-negotiable. Do not break this rule. You break this rule, your results are on you. Okay? All right. So if it doesn't follow it, done deal. That's rule number one. If the money candle does close close to the range high or low, those are the best trades to see. Go ahead and enter as soon as that 1 hour mark does hit. Bigger money candles, wait for that retracement. Even if it doesn't come, then oh well. Sometimes the pair will just go straight down. You miss the trade. So what? There'll be another one in an hour or two. So this thing is 24/7. But again, stick to your schedule. And of course, manage your risk. Do not go all in on every trade. Okay, you will not win every trade. I don't care. Even if you see something like this and you're thinking, oh, this has got to pay out. It might not. Okay, it might not. There are no guarantees in trading. So manage your risk. That way, you'll lose, say, $100, but then you'll make $500. You'll lose $100, but then you'll make $200. You'll lose $100, but then you'll make $500. That's how your trading should look. Or you may lose 1%, but you'll get 2%. You may lose 2%, but you'll gain 6%. You may lose 3%, but you'll get 10%. All right. Losses small, wins big. If you master that, you can trade forever. Okay. So thanks so much for watching. Please subscribe, and your trading will never be the same. I appreciate your time and attention. Have a great rest of your day.